The Central Bank of Nigeria has taken fresh steps to balance growth with inflation easing. Therefore, at its just concluded Monetary Policy Committee meeting, the monetary policy rate was cut by 50 basis points to 27%, while the cash reserve ratio for commercial banks dropped by 500 basis points to 45%. For Martin Bank's cash reserve ratio, CRR, was retained at 16%, alongside the liquidity ratio at 30%. The bank also adjusted asymmetric corridor to a plus or minus 250 basis points and introduced a 75% CRR on non-TSA public sector deposits. Mukhtar Muhammed is the CEO at FinanceWithMukhtar, and he joins me now to discuss the economic issues. Thank you for being here. Inflation drops for fifth consecutive time. Now, the MPC cuts interest rate to 27%. In a simple language, please explain.
In a simple language, what it means is that you can borrow at a lower rate now. When they say they cut interest rate, that means that you can borrow at a lower rate compared to what you were borrowing last time that the rate was up. That's definitely what it means in a simple language.
Analysts say the moves tighten liquidity while supporting economic stability. Could you speak on this?
Yeah, I can't but agree with that. If you look at the economy, you realize that we've had a lot of non-performing loans. And so a lot of companies have borrowed and they are not able to pay. And so what we have seen now is that they will have more liquidity, like the cash reserve ratio was moved from 50% to 45%, 5%. So that will mean that the banks will have more liquidity to borrow to the real sector. You also saw that point whereby 75% of TSA also will be kept, rather than banks using TSA money to give back to government. It will now just use about 25% of that money, and that's also should be used towards galvanizing the economy. Well, I think we must commend the current CBN management team. They've come in with a lot of innovation that we are seeing that will definitely help the economy, especially with the rate cut. But again, it's now becoming a global thing where you see the rate cut, Ghana cut rate, Tanzania cut rate, Angola cut rate, US have cut rate, and virtually all economy are cutting rate, just like at the point all economy were increasing the rate. So for me, I think it's a good move. I didn't expect it. I thought there would be a rate cut, but maybe towards the last MPC meeting of the year. So it's a good move, but especially for smaller business. Okay, people will ask what's the impact on the equity market? The impact on the equity market is going to be positive. Will we have that negative impact on the fixed income space? I don't think so, because when you have rate cut globally now, what you see that you see a lot of funds coming back to Nigeria, because Nigeria fixed income rate will still be one of the best in the world. So that will not drive investors out of Nigeria. That will also likewise attract more investors into Nigeria. But the big take we have to also commend the CBN for is maintaining stability in the exchange rate, and they are saying that they will continue to do their best to make sure that the naira to the dollar is fairly balanced. And so for me, again, kudos to the CBN for what they have done this time around.
Yeah, I was going to ask you holistically if this is a good thing. You've confirmed that it is indeed a good thing. Maintaining stability long term, do you think they can keep to that promise?
Well, I think I'm positive because, again, when you look at the non-oil sector and also you look at the oil sector, you are able to see, we have seen a synergy whereby we have both the non-oil sector and the oil sector contributing to the Nigerian economy. So definitely when you have a shock in one area, then you might also have a positive outlook in the other area. There's nothing for us to fear. Again, the man that is down, fear no fall, because our oil benchmark is about $70 per barrel. As it stands now, we are doing about $66. And again, we have improved our revenue generation internally. So long-term stability is still good. It's still achievable. Oil output at this it was about 1.68 million barrel. We are improving on that also. So definitely all the signals for long-term stability of the current economic result that we have seen is very realistic. As from what I've seen, from what we are doing, exchange rate is still going down. The dollar compared to global currency is still weak, and also we are capitalizing on that. And we have attracted a lot of inflow. The reserve is in its 5-year high, about $42 billion reserve. So all looks good. I think we will be able to maintain that stability in the long term, especially if we keep doing what we are doing.
All right, Mukhtar, as always, thank you very much for sharing your thoughts with us.
Thank you for having me.